Hello and welcome to our final 2025 installment of our Markets in 2 Minutes series. This is Darrell back again from the Wealthspire Investment Team. It's been an exciting year on a lot of fronts, but we wanted to use this last opportunity to provide some underlying context around what's going on in equity markets this year and then offer some perspective about possibilities for 2026. If you were to go back to review some of the content we were producing at the end of 2024, one of our key observations was that while equity market returns were quite strong that year, they were largely driven by multiple expansion, meaning that prices were rising faster than earnings, which is typically a sign that the market is anticipating an acceleration of earnings growth in the future. But when we see markets behaving like that, we tend to view that as something that potentially leaves the market in a more vulnerable position going forward, because you run the risk of downside if the market's expectations don't materialize. And at the very least, multiple expansion tends to be a less sustainable way to drive markets higher. Well, as 2025 unfolded, there were a lot of potential headline risks that might have derailed things, but the market ended up delivering on that earnings growth, which was a major reason that returns were once again so healthy. And if you look here at this chart, you can see that the price to earnings ratio on the S&P 500 is on pace to end the year right around where it started. And as of this recording, the market looks poised to deliver close to a 17% return for 2025. So it's quite significant in that context for earnings to have largely kept pace with prices. So as we look forward to 2026, this is a table that allows us to run some scenarios and project what market returns might look like under a variety of different combinations of earnings growth and changes to the PE ratio. And there's a lot going on here, so it may even be worth pausing the video for a moment. But basically, what we're doing here is taking potential earnings growth scenarios, slapping a multiple on it, and then taking a look at where the S&P 500 ends up. And it becomes a little bit of a choose your own adventure style exercise. But year over year EPS growth for the 2025 year is expected to come in around 10 or 11% or so. Then once all the books are closed next year for 2026, earnings growth is expected to be 14. So if we get anywhere in that ballpark of that 10 to 15% range, you can see based on those two right-hand columns that the market is going to be in a pretty good position, where we would need to see pretty meaningful multiple compression in order for the market to have a difficult down year. And it tends to be relatively rare when you have a year of double-digit earnings growth that it would coincide with a significant reduction to the price earnings multiple. All this to say, while the market has been on a strong run and it is certainly reasonable to expect volatility next year, especially in what will be a potentially contentious midterm election cycle, the market does not appear overly stretched when you look at the underlying earnings growth that's expected. As we move into 2026, though, please be on the lookout for more content from our team as we look to keep everyone informed of our most up-to-date perspectives on markets and the economy. And in the meantime, we hope you all have a relaxing holiday season and a wonderful new year. See you in 2026.